This is my presentation for the social networks of venture capital in Silicon Valley for CAP 4932. So just to give a little background on my project and identify what it is that I'm measuring, venture capital, VC, is money provided to seed early stage emerging and emerging growth companies. Venture capital firms invest in companies in exchange for equity in the companies that it invests in, which usually have a novel technology or business model in high technology industries such as biotechnology and IT. So why are we choosing Silicon Valley? Well, there's a lot of places in the United States and the world that are dense with venture capital firms investing in companies. However, collaborations amongst VC firms in Silicon Valley is far more pronounced and dense than any other area. Second, the number of investments and amount of money invested by VCs in Silicon Valley staying local are much higher than the number of investments and monies invested by other areas, which simply means companies that start in Silicon Valley stay in Silicon Valley, grow, evolve, and emerge there. Historical development, as well as the particular structure of the social networks within Silicon Valley, is precisely what has fostered a relatively higher growth development of the region compared to many other regions of the world. And I think we see this as very true today. This has been true throughout time, but definitely recently there have been plenty of companies that have started in Silicon Valley. Companies such as Twitter, Uber, Snapchat, and Google are all based in Silicon Valley and have used VC firms to fund their startups during their infancy. Some of our most innovative and important companies have started in Silicon Valley. This is the graph for VC firms in Silicon Valley. A social and financial network is crucial to the development and the perpetuity of the investment firms. This graph lists the occasions when two or more VCs cooperate and choose to co-invest money in the same company. We have around 111 VC firms in this graph. Each one of these is connected to another node. Some of them are not, which means that they invest money solely. They venture into opportunities by themselves. If there is a line, one or more lines connecting two nodes, that means that there is a venture capital firm who has cooperated in investing in a company with another VC firm in order to mitigate the risk and split the profits. So here we have a measure of the degree centrality of some of the most important nodes on this graph. We start with Crosspoint Venture Partners, which has a centrality of 13.64. This simply means that this is one of the most, or actually the most, important node in the graph. It has the most influence over any other node in the graph. Coming up behind is Sequoia Capital and Hambrecht and Quist Ventures, as well as Kleiner Perkins, Caulfield, and Briars. These would all be located within this dense part of the graph, which means that they are the most influential. They have the most nodes coming in and out. Here we have the measure of the closest centrality of the graph. We have Crosspoint Venture Partners and Sequoia Capital with 2.71. The closest centrality simply means the more central a node is, the lower its distance from other nodes. Now, this is not a measure of the physicality distance of the nodes between the lines or anything else. This simply means a distance of walks from one node to the other. So we'd have a walk from here to here to here and continue on tracing the nodes wherever they go and measuring its distance from other nodes. Here we have a measure of the betweenness centrality. This is pretty much the number of times a node has acted as a bridge along the shortest path between two other nodes. Essentially, when we are measuring the shortest path, we want to find which path has the shortest distance from one node to the other. By measuring betweenness centrality, we can see how many times a node has been in between two nodes that we are measuring. We can see here that Sequoia Capital has the highest betweenness centrality of any other VC firm in Silicon Valley. What this essentially means is they are connected within this social network to some of the more important nodes, and it is located on the path that is usually the shortest path between any node that we are measuring. Here we have the number of investee companies. This is something I found very interesting. This measure is essentially how many times or how many different companies have been invested in by each firm. We can see here that Hambrecht and Quist Venture has the most investee companies with 111. This is not necessarily a measure of how important a node is. However, it shows that how much variation they have in their investment portfolio. This information is interesting when we compare it to some other information I have coming up. Let's take a look at that. This is the amount of money invested in millions of each of these companies. Now this is what I found very interesting. We can go back and we can see Hambrecht has the most amount of companies that they invested in with 111. However, they've only invested 416 million compared to Kleiner Perkins Caufield and Breyers invested a whopping 517 million. Over half $500 million has been invested by this company. However, they have only invested in 63 different companies. I found this interesting because it says quite a bit about the particular investment company and how they decide to go about their portfolios. Now, the amount of money invested, as well as the investee companies, does not necessarily correlate with how important a company is. This entire graph is more focused on the cooperation between venture capital firms in investing in a company, not necessarily their own ventures themselves. So this is a normalized connected graph. It has a removal of all the nodes that equal 0. We are left with about 72 nodes. All of them are connected, not necessarily connected to each other in one centralized graph, but every company that has not cooperated in a venture with another firm has been eliminated from this graph. This is the percentage of the number of ties to other VC firms. What we see here is that about 1/3 of the graph was not connected in any way to any other VC firms, meaning they decided to invest their capital by themselves without the cooperation of any other firm involved. The most popular option we have is cooperating with between 1 and 3 other firms. This has a percentage of 40.5% over 1/3 of the graph. The majority of firms investing in companies in cooperation with other companies is 40.5%. Now, what this says to me is that companies that co-invest are not always looking to invest with everybody. It seems that when they have found certain companies that they enjoy working with, they tend to stick with those companies. Perhaps there is some sort of trust involved within investing that these companies value. All of that is up for discussion. However, that's exactly what it seems to me. It is less popular to invest in 4 or more. It's less popular to cooperate and invest in more than 4 other VC firms. The average number of ties between these firms is 2.81. The standard deviation is 3.35, and the maximum number of ties is 15. What we can see here in the standard deviation is that not every node on the graph is equivalent. In fact, there are some nodes that are far more important than other nodes on the graph, which leads the standard deviation to be the amount that it is. Had most nodes on the graph had less connections to other nodes, the standard deviation would be lower. So this is the measure of the normalized degree centrality of a graph with only connected nodes. This is identifying the nodes that are, again, the most important. So we have a mean of 2.56, a standard deviation of 3.04, a minimum of 0, which is the ones that were eliminated, and a maximum of 13.64. The network centralization is 11.28. Essentially, these are both measures of how similar all these graphs are all the nodes are in terms of connectedness with each other. Closeness centrality. As we said before, the more central a node is, the lower its distance from other nodes. What we have here is a mean walk distance of 2.11, a standard deviation of 0.82, a minimum of 0.9, and a maximum of 2.71. A low network centralization of 1.23. This, in conjunction with the standard deviation, leads me to see that most nodes on this graph are similar in closeness centrality. We have here the page rank of the graph that has all of the nodes that are not connected eliminated. We have a mean of 1.51, a standard deviation of 0.92, a minimum of 0.205, and a maximum of 4.31. And we are measuring how influential a node is on the graph and taking a mean calculation of that. Here we have eigenvector centrality with a mean of 0.042, a minimum of 0.001, maximum of 0.087, and a median of 0.012. Eigenvector centrality is similar to PageRank, however we also take into account how important its neighbors are. Here we can see the industry of each invested company. So companies that have gotten investments, these are essentially what field of business they were in. We have about 91 companies in the biotechnology sector, 305 in the communications, and 773 in the software department. This is very interesting to me. I think we've seen that this would be very predictable in the world that we live in. Software and electronics in particular have skyrocketed in popularity and the subject of investments. We have seen that lots of software companies have started in Silicon Valley and have become very popular. This leads us to believe that we are going to have a lot of additional companies that are seeking venture capital from Silicon Valley. I believe this is a good thing, and this is where we are heading anyways as a civilization. Now, I would normally open this up to any questions that we would have. If you have any questions about the presentation, I definitely encourage you to email me about them because I would like to answer. Or if you'd like to open this up to the class and email me any questions they have, I'd be more than happy to answer them. Thank you.